Hey everyone, Datavault AI is making some bold moves right now, and investors are starting to pay very close attention. The company, trading under the ticker DVLT, has announced plans to spin off its Acoustic Sciences division into a completely separate entity, while also preparing to launch multiple data tokenization exchanges. And if you're wondering why this matters, the answer is simple. These decisions could completely reshape how the company operates, how it generates revenue, and how investors value the business moving forward. Right now, Datavault AI is trying to position itself as more than just another AI company. Management appears focused on building a larger ecosystem centered around data monetization, digital licensing, AI infrastructure, and tokenized marketplaces. The company seems to believe that data itself could become one of the most valuable tradable assets in the future, and they want to create the platforms that allow businesses and institutions to buy, sell, license, and exchange that data securely. But before we dive into the tokenization side of the story, let's first talk about the Acoustic Sciences spinout, because this move could reveal a lot about where the company is headed next. Spinning off a division usually means one thing: a company wants to sharpen its focus. Instead of managing multiple businesses under one roof, management separates a segment so the core company can concentrate on areas it believes have higher growth potential. In this case, Datavault AI appears to be doubling down on data exchange platforms, AI-driven licensing systems, and regulated digital marketplaces. That's important because investors often reward companies that simplify their business model and focus on their strongest opportunities. By separating Acoustic Sciences into its own entity, Datavault AI may be trying to remove distractions and allocate more capital, management attention, and operational resources toward its primary AI and data monetization strategy. And this comes at a very critical moment for the company. Datavault AI recently reported first quarter 2026 revenue of approximately $3.42 million. That's a massive jump compared to the $629,000 reported during the same period last year. On the surface, that kind of growth grabs attention immediately. Investors love growth stories, especially in emerging sectors tied to artificial intelligence and digital infrastructure. But there's another side to the numbers that cannot be ignored. Despite the strong revenue growth, the company also reported a net loss of more than $53 million during the quarter. That's a huge loss relative to current revenue levels, and it highlights the major risk surrounding the company today. Datavault AI is still spending aggressively while trying to scale its operations, build partnerships, launch exchanges, and expand its market presence. This creates a situation where investors are asking one major question: can Datavault AI actually execute on its vision before the financial pressure becomes too large? Because right now, management is still projecting at least $200 million in revenue for full year 2026. That is an extremely ambitious target considering where revenue currently stands. To hit those numbers, the company will need rapid adoption of its platforms, major licensing agreements, strong enterprise partnerships, and successful execution across multiple business segments simultaneously. And this is where the tokenization exchange strategy becomes incredibly important. The company is preparing multiple data tokenization exchanges, and this could become the centerpiece of the entire Datavault AI story going forward. Now, for many investors, the phrase data tokenization exchange might sound complicated, but the basic idea is actually simple. Datavault AI wants to create marketplaces where datasets can become tradable digital assets. Instead of data simply sitting unused inside corporations or institutions, the company believes businesses could eventually monetize that information by licensing, trading, or exchanging it through regulated digital platforms. Think about how valuable data has become in today's economy. Companies collect information on consumer behavior, healthcare trends, logistics, security systems, advertising performance, financial transactions, and AI training models. Data now drives decision-making across almost every major industry in the world. Datavault AI appears to believe that in the future, organizations won't just store data, they'll actively trade it as an asset class. And if that happens, the company wants to own the infrastructure powering those transactions. That's the bigger picture investors need to understand here. This isn't just about launching another blockchain project or crypto platform. Management is attempting to build regulated, compliance-focused exchanges that operate in enterprise environments where security, licensing, ownership rights, and legal frameworks matter. That's also why partnerships could become extremely important for the company moving forward. Datavault AI has previously discussed partnerships and collaborations involving enterprise-level technology providers, including IBM. Relationships like these matter because large corporations usually need trusted infrastructure partners before adopting new digital systems. If Datavault AI can position itself as a compliant and secure provider of tokenized data infrastructure, the company could potentially access very large addressable markets over time. But again, there are serious risks investors cannot ignore. First, the company remains unprofitable. Second, these tokenization markets are still developing, and regulations around digital assets continue evolving globally. Governments and regulators are still determining how tokenized assets should be classified, traded, taxed, and monitored. That means regulatory uncertainty could become a major obstacle. If regulations tighten or approvals become delayed, the company's expansion plans could slow significantly. Another concern involves liquidity. Launching an exchange is one thing, getting people to actually use it is something completely different. For a tokenization exchange to succeed, buyers and sellers need confidence in the platform. There must be enough activity, enough assets, enough participants, and enough trust for transactions to happen consistently. Without liquidity, even advanced technology platforms can struggle to gain traction. And then there's the issue of shareholder dilution. Datavault AI has a history that investors may associate with capital raises and dilution concerns. Growth companies often issue additional shares to fund expansion, acquisitions, technology development, and operations. While that can help fuel growth, it can also reduce the ownership percentage of existing shareholders over time. So investors watching DVLT right now are balancing two completely different possibilities. On one side, there's the bullish scenario. In that version of the story, Datavault AI successfully launches its exchanges, attracts enterprise adoption, signs major licensing agreements, expands recurring revenue streams, and becomes an early leader in regulated data monetization markets. If that happens, the company could potentially establish itself in a very large and rapidly growing sector tied directly to AI, digital ownership, and enterprise data infrastructure. But on the other side, there's the bearish scenario. Execution delays, regulatory complications, weak liquidity, ongoing losses, operational strain, or additional dilution could prevent the company from reaching profitability and sustaining investor confidence. And that's why this stock continues to generate so much debate. Some investors see a high-risk speculative company chasing futuristic markets that may take years to mature. Others see an early-stage business attempting to build infrastructure for what could become one of the next major technology trends. What's clear is that Datavault AI is not standing still. The spin-out of Acoustic Sciences signals a company trying to simplify and sharpen its strategic direction. Meanwhile, the Tokenization Exchange initiative shows management is aggressively pursuing a vision centered around AI, digital assets, and monetized data ecosystems. The next several quarters could become extremely important for determining whether this strategy gains real momentum or faces significant challenges. Because at the end of the day, investors don't just want ambitious plans. They want execution, adoption, revenue growth, and eventually, profitability. And until Datavault AI proves it can deliver those things consistently, the company will likely remain one of the more speculative but closely watched names in the AI and data monetization space. This is not finance advice.